commenced and is in steady progress. We are confident that this process will be completed within the stipulated timelines or even before that, post which we will move forward with the next steps as mandated by the law. While our CFO Rohit Gupta will take you through the granular details of the financial and operational performance of the company, let me give you an overview of the business environment. The second quarter has been one of recovery and revival for us and the industry at large. The second wave of the pandemic had a sudden surge in cases, served as a disruption to the growth momentum in the previous quarter, and some effects of that also spilled over into the first half of the second quarter. But we are glad to note that the increase in vaccination drives and reduction of cases have led to gradual reopening of business activities across the country. This has provided an impetus to the consumer and to the overall advertiser sentiment, resulting in green shoots for macroeconomic growth. Amidst this scenario, the underlying trends seen in the content consumption during the lockdown remain at the fore. To elaborate on that further, viewership on TV and digital video streaming platforms continue to record new levels of growth. Furthermore, the launch of high-impact entertainment properties and engaging films across platforms has encouraged advertisers to increase their spends across genres. As per our plans highlighted in the previous quarter, we launched 30+ shows across our channels, leading to a gradual recovery of viewership in certain markets where we had lost share. On ZEE5, our new strategy continues to bear fruit as we remain in the growth mode for the business. Noteworthy efforts have been taken to improve the digital platform growth across key aspects like content and user experience, which have led to higher user acquisition and monetization. Globally, the platform continues to post steady positive growth across markets, including the United States, where we launched in the previous quarter. We continue to invest in our core businesses to further ramp up our offerings to create compelling entertainment for our viewers across the globe. The impasse around subscription revenue on the linear side of the business continued during the quarter, leading to a marginal decline. That said, we had announced our channel pricing in October in line with NTO 2.0, but I would like to inform you that in the latest communication that the Telecom Regulatory Authority of India has allowed broadcasters time till 31st December 2021 to revise and publish the RIOs. The revised implementation date is now 1st April 2022. Like I have maintained earlier as well, after the initial few quarters of disruption post-implementation, we will be back to delivering healthy growth in subscription numbers. Overall, with the receding fear of an anticipated third wave, the green shoots in demand are clearly visible. The reopening of malls, theaters, and other economic and leisure activities, coupled with the festival season, will certainly see advertisement spends bouncing back in the subsequent quarters. We are hopeful of a gradual recovery in theater occupancy, and with the slate of films lined up for release from Zee Studios, it will further serve as a positive factor for us in the subsequent quarters. We remain optimistic that if this trend continues, advertising should surpass the pre-COVID levels and swing into healthy growth mode. Post the impact of COVID in the initial part of the quarter, the creation and availability of original content, along with the relentless execution across the business, has led to revenue and EBITDA growth sequentially and on a year-on-year basis. We expect this robust growth and performance to continue in the coming quarters. Overall, there are very clear indicators pointing towards the sharp recovery for the economy and industry at large. I remain confident that the improved business sentiments will provide a strong growth momentum for the sector, helping businesses bounce back to pre-COVID levels by the end of this fiscal. On that note, I would like to hand over the session to Rohit to take you through the financial and operational performance of the company, and I look forward to interacting with you during the Q&A session. Thank you. Over to you, Rohit.
Thank you, Puneet. Hope all of you are doing well and taking good care of yourselves. The second wave of COVID took us by surprise in the first quarter of this financial year when things were starting to normalize. We continue to see the residual impact of the same in the first half of the quarter as well. As number of cases came down sharply and the pace of vaccination drive accelerated across the country, we saw strong bounce back from advertisers in second half of the quarter. The accelerated progress in the pace of vaccination, release of pent-up demand in the festival season provides much needed upside to grow revenues. During the quarter, we continued to be India's strong number 2 TV entertainment network. The viewership share for the quarter increased by 70 BPS to 17.7%. This increase was on account of 30 plus new launches across the market. These new launches helped us increase share across key slots, while the performance in markets like Bangla, Telugu, Kannada, Oriya continues to be strong during the quarter. In Hindi, Tamil and Marathi markets, our share should improve further based on compelling new launches planned in quarter 3. We will continue to launch new shows across the market to drive share gain. New channels now contribute about 1.2% of the total network share. ZEE5 strategy outlined in previous quarters is well on track, and we have started seeing robust growth in operating as well as financial metrics. Global MAUs and DAUs as on September 30th stands at 93.2 million and 9.3 million respectively, with watch time of 186 minutes. During the quarter, we launched 13 originals across languages. We have a compelling slate of content lined up in H2. Revenues for ZEE5 during the quarter grew sequentially by 17% to rupees 1305 million. EBITDA losses for the quarter stand at rupees 1720 million. Zee Studios during the quarter released 5 movies, including theatrical release of 3 movies. We saw encouraging response for theatrical releases in the states where we were allowed to release. With most states governments gradually lifting the restrictions on theatre opening, we remain confident of stronger performance in H2 with strong pipeline of movies. Now coming to the financial performance for the quarter. We have witnessed healthy recovery in ad revenues towards second half of this quarter. Ad revenues for the quarter grew by 17.6% sequentially and 20.7% YoY. Ad revenues for H1 stand at 2159 million, up 52.3% on a YoY basis. Subscription revenue for the quarter stand at rupees 7885 million, marginally down on YoY basis. Overall revenues came at rupees 19788 million, grew 14.9% year-on-year. Consolidated revenues for H1 FY22 stand at rupees 37538 million, up 23.7% on a YoY basis. The EBITDA for the quarter came at rupees 4121 million with a margin of 20.8% on the back of higher ad sales. EBITDA for H1 FY22 came at rupees 7562 million with a margin of 20.1%. PAT for Q2 came at rupees 266 million, up 27.4% Q-on-Q and 185% YoY. PAT for H1 stands at rupees 4749 million, up rupees 3524 million from H1 FY21. The cash and treasury investments of the company as of September 21 for rupees 16.2 billion, post payment of equity dividend of rupees 2.4 billion. The cash and treasury investments include bank transfers of rupees include bank balance of rupees 7.8 billion, fixed deposits of rupees 3.4 billion, mutual fund investments of rupees 4.5 billion, and NCDs worth 438 million. Over to you, Anshul.
Thank you, Rohit. Stephen, we can now begin the Q&A round.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Naval from Emkay Global. Please go ahead.
Yeah, thank you for the opportunity. My first question is on ad revenues. If I look at performance of your peers, that seems to be better off as compared to yours, if I look at on 2 years CAGR basis. Would you attribute that weakness only to market share loss, or the yields have corrected significantly, on account of, again, the same reason, or I am missing something over here? So that is my first question.
Rohit, go ahead.
Yeah. So Naval, I think, like I said, we have seen ad revenues bouncing back in later half of this quarter, and advertisers have started spending for growth. We expect that this growth will continue, and while there was softness in market share, in some of the channels, like I already mentioned in my opening commentary, we have taken steps to correct that. And what we are now expecting is, with this festive season coming in, we should see bounce back in ad revenues in H2.
Okay, and one point I missed out, what Puneet stated, that ad revenues will be at pre-COVID level. Were you talking about industry or Zee specifically, and what would be the timeline for that?
I was referring to H2 for industry and for Zee. Both will be in line with the pre-COVID levels numbers.
Okay. And lastly, on ZEE5, now can you give some guidance on number of show launches? Because although now production is kind of back to normalized level, and you have launched 13 shows in 2Q, so what is the number or pipeline for H2 for this year?
Rohit, do you have the numbers?
No, we have a very healthy slate, Naval, for H2. Actually, the number in H2 will be higher than H1, and because of COVID, some of the originals got pushed to H2. So the number will be more than 13, and it'll be about 17 to 18.
Per quarter basis, you are saying, in H2?
Yeah, in Q3, yeah.
Understood. Thank you and all the best. I'll come back in the queue.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on your movie production business. So we are seeing very good pent-up demand, for example, Suryavanshi, and in South India also Avante. So I want to understand pipeline of movies, potential for Zee Studios next few quarters, if you could discuss, because now things are almost normalizing and capacity constraints also going away. And one of the other listed South Indian broadcaster has prioritized clearly the movie production over the OTT. Would you also, if given a choice, would you also prioritize movie production in the near term, medium term over the OTT content? I do understand a general answer that both are important, but given a choice, and will there be a slight inclination to tap more the movie production side?
Yeah, Abneesh, thanks for that question. So first and foremost, we have a very healthy pipeline of film releases lined up in the H2 of this year. This includes a very healthy skew towards the regional languages. And when I say regional languages, I mean covering both the northern region as well as the southern regions. And also the slate is from A+ movies down to even mid-size, low-budget films. We do expect that it will be very healthy returns for us in the coming H2 from the Zee Studios business. On your second point on reprioritizing our business towards the studio model at the cost of ZEE5, no, we are not going to do anything like that. We are focused very much on ZEE5. That remains our topmost priority as a company, and we will continue to focus on that. The Zee Studios business is an independent plan, and we believe that both will coexist. And Zee Studios is a very critical strategy in the success of ZEE5 and the linear business, and therefore these are very complementary to each other rather than against each other.
Sure. One follow-up on ZEE5. So ZEE5 revenues finally good pickup quarter on quarter. It had been stagnant in that broadly 95 to 110 crore revenue. It's a good scale up in spite of cutting the prices. So my question here is essentially what is going right here? Do you see this kind of a quarter on quarter scale up further every quarter? So normally e-commerce startups or digital startups are seen like that. So that's one bit. Second, now with so much of confidence and so much of aggression on Sony Zee merger, won't OTT see some backseat given ultimately two OTT apps for Sony Zee won't make much sense? So is there any dilution in aggression towards ZEE5 because of the impending merger?
Well, Abneesh, until the merger doesn't happen, things remain as it is. So life is normal. There is no change in thinking. We will continue our aggression on ZEE5 as it is. In terms of, can you repeat the first part that you were?
Yeah, quarter on quarter scale up of revenue in ZEE5 is good. It has finally broken out. But can we look at this kind of a quarter on quarter scale up going ahead, or is it more now likely to now remain stable at that 135 crore revenue quarterly?
Certainly not, Abneesh. You will see scale up of revenue quarter on quarter. I can't comment from one quarter to another quarter, but certainly on a ongoing basis, you'll see the revenue of ZEE5 growing leaps and bounds.
Sure. And last question. So good to see some market share improvement, but still it is well below your past averages. So if you could discuss with the new content some of the good things which has worked in your three laggard channels. And normally Zee grows faster than industry. If your flagship channels, etc., have seen some market share erosion, currently are you seeing some growth slower than the industry growth rate in terms of advertising?
Abneesh, laggard to mat bolo yaar. I mean, theek hai. Every child goes through some problem that is.
Yeah, but it's a flagship channel. So it becomes very important.
Yes, it does. I understand that. So it's a child that is having some problems, and we are fixing those problems. And I'm quite certain in the coming quarter itself, you'll see that rebound happening on the flagship channel and the other channels as well. So, and as you rightly said, we will endeavor to grow faster than the industry normally does. So the turnaround will be as usual in the Zee style. But certainly first we have to get the content right. You must have already seen the kind of content lineup we are bringing, including Saregama and some of the other key properties that we have lined up for not just Hindi, but even for the regional languages. So I'm pretty confident that in the coming quarter or quarter 3 and quarter 4, you'll see a significant improvement.
And one last follow-up on advertising. So currently every sector is seeing either a 10-year high or a 40-year high in terms of cost inflation. And FMCG is 55% of your advertising, which is seeing a very, very high gross margin pressure. So I'm sure some sectors will revive because of the normalcy in life coming back. But if 55-70% say of your sector is going to, if your advertising is going to see gross margin pressure, what is the feedback you're getting from your advertiser next 2-3 quarters? Because it's looking very tough on the advertising sentiments.
Well, at the end of the day, it's a matter of share of voice, right? I mean, if one sector or one advertiser from that sector goes after share of voice, others will have to follow. But I don't want to double guess their business strategies, etc. As of now, we have no indications that they're going to be pulling back. We are getting all the indications that they do want to come back spending to the pre-COVID levels, if not higher than that.
Okay, that's all from my side. Thanks and all the best. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Arun Prasad from Spark Capital. Please go ahead.
Thank you. Thank you for the opportunity. My question is first on advertisement spends, the A&P spends and the P&L. It is substantially higher as compared to base quarter or even sequentially. Any one-off in this? You did mention that in the presentation that it's mainly on investments on Zee, but can you give more color on this, whether it will remain at this level or is it some kind of an on-off only in this quarter?
No, Arun. So if you look at the earnings release, we have had almost 38 launches on the linear side and about 30 on the B5 side. At this time, launch strategy will remain for at least another quarter or two. So you will see higher A&P spends happening for the company in this financial year, and then you'll start seeing stabilization happening to that. So this is directly in correlation with the content strategy and launch strategy of the content across various geographies and languages.
So this will remain at this level even though the revenue hasn't caught up to the pre-COVID levels, or is it the effort to bring the revenue up to the pre-COVID levels? How should we look at it actually? Because the revenue hasn't kept pace with the top line, hasn't kept pace with the ad spends.
Arun, generally in our business, the revenue has a lag to the content and the ratings delivering because we are dealing on 13-week cycles with the advertisers and the agencies. So that's the general lag that we see. Rohit also talked about that we have a strong lineup of content to be launched in Q3, both on the linear side and Q4 on the digital side. So that is going to take a lot of A&P spend, and we are certain that as and when the content performs, and it will perform, the revenue lag will go away and you'll start seeing the revenue tracking a similar trend. Of course, not that every quarter is going to see 30 to 40 launches going forward forever. So therefore, there should be some stability in the next financial year, as I said.
My second question is on ZEE. There is an addition of 2 million DAU, daily active users, sequentially. How much of this is influenced by the US business launch? Any little more details on that? Or can we expect similar net adds quarter on quarter sequentially from here onwards?
No, I don't think we should be predicting net adds and stuff like that on a quarter-on-quarter basis. It will be too premature for us to start giving that kind of guidance. Our endeavor will be to continuously grow the business. United States, as you will agree, of that 9.3 million will be a fractional amount because eventually the 93 million, also a large part of that, or a significant part of that comes from India. The population outside the country is what it is. We all know what that number is. So, therefore, the number is predominantly Indian driven.
Okay. So what exactly went right during this quarter or to result in this? As I see 31% sequentially it has grown. Even the MAU numbers have grown very well. So can you just throw some color what exactly went right this time?
As I said in my opening remarks, two things that we've been working on. The new strategy was on focusing on the platform, which is the user experience and user interface, and the content lineup. Both have worked well for us to have delivered these kind of numbers. And this growth is not just in this quarter. If you look at, we have been growing sequentially over the last 3-4 quarters consistently, both on MAUs and the DAUs.
Yeah. Okay. Fair enough. Thanks, and all the best.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Jinesh Joshi from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity. So the revised tariffs that we have announced in order to comply with NTO 2.0, do you think the hike taken is sufficient to kind of recoup the loss of revenue that can come from weaker demand of bouquets as most popular channels will now be sold a la carte?
Well, certainly, Mr. Joshi, we have taken all that into account before deciding our pricing and So in our experience and wisdom, that is, it should work to offset any revenue shortfall that we may have. But time will tell once we go to the market with it as to whether we are right or wrong. But in our wisdom and in our experience, this should be something that will work.
Can you share what is the current revenue mix in terms of bouquet and a la carte?
Oh, sorry, Rohit. I don't think we'll have that immediately.
Yeah. I can take this with you one-on-one. I don't have that number offhand there.
One last bit from my side. I think we are also planning to launch quite a bit of new shows in 3Q. In this quarter, you highlighted we have launched 30 plus new shows. So any number you have in mind which you would want to share for the upcoming quarter?
I think for the upcoming quarter, the number would be the same range, Mr. Joshi. It will be about maybe 28 to 30 shows across languages.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi, good evening. So a few questions here. So first of all, on the subscription side, now international subscription, since now the OTT launch is there pretty much. We are still in the ramp-up mode, but at least the initiative is there to be on a global basis. What are your thoughts on the international subscription revenues? Do you think this will get largely transferred to ZEE5? Your thoughts there, please.
Well, the market to market will differ, Ankur. It is not one glove fits all. So, for example, in the United States, we have taken a conscious decision that we have gotten off the largest linear platform and focusing purely on ZEE5. So there certainly our endeavor will be to move towards the ZEE5 strategy. The other markets, we have a complementary strategy of continuing the linear distribution as well as the digital business. So we will play this out market by market, and it's not something that is an overnight switch on or switch off. So it will be done sequentially, market by market, as the operating team sees as the best strategy to go forward.
Sure. And just a follow-up there, from a pricing perspective, going directly through OTT will be value accretive to you with respect to the specific market versus what you are getting right now through a distribution network channel?
Sorry, I couldn't hear you. You were a bit faint. Going directly would be?
So my question was that going directly in the international market through the OTT route, let's say in US, versus the distribution model right now, will this be more value accretive to you on a yield per user basis?
Yes, in the short term, it will actually be value dilutive because you will lose the base that you were enjoying being paid by the B2B platform. But eventually, we expect that the yield will be much higher and much better for us going forward because it's a direct customer that we own rather than owning through a B2B platform.
Sure. Okay. And secondly, on the advertisement side, now while we are still down on a 2-year CAGR basis, how far have we reached in terms of recouping the ad yield correction that had happened, over the last maybe couple of quarters?
Good.
So, like I said, we're clearly seeing ad revenues coming back in the second half of this quarter, and we are also working on the ad yields as well. And H2 of this year, we should see growth both over FY20 levels of H2 and FY21 levels of H2.
Sure. And Rohit, if you can maybe highlight on the yields basis, or let's say currently, maybe in the festive season, have we, from a volume use perspective, are we more or less fully utilized across the network?
Yes, we are fully utilized across the network, and even on, like I said, on yield basis, we are working on the yields with our advertisers, so that is improving as well.
Okay. That's helpful. That's it from my side. Yeah. Thank you.
Thank you. The next question is from the line of Raghav Vagera from Philip Morris International. Please go ahead. Mr. Vagela, your line is in talk mode. Kindly go ahead with your question, please. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. Can you share thoughts on subscription revenue growth in FY23 once the NTO 2 gets fully implemented? How are you thinking about FY23?
Kunal, now that the implementation itself is postponed to 1st April 2022, it's still early to predict what 23 will look like, because until we go to the market with the plan, we will not know the outcome. But I still believe that they will see some disruption in maybe a quarter or two, and then things should stabilize and growth should come back. And I've always maintained that post the disruption, the growth will be back to the high single digit kind of number for the industry.
Sure, okay. Next one on if your thoughts on margins going forward. When are you looking to get back to 25% and whether getting back to 30%, which was the earlier target, and that's realistic in the medium term, or we are looking to maybe get back to 25, but 30 seems difficult now?
Well, step by step, Kunal. So 25 is the first step for us to get to, but we'll be able to guide you better at the end of next quarter, once we have seen the full color of the advertising coming back in or not. So give us one more quarter, and we'll come back to you with our guidance on that when we talk next quarter in January.
Sure. And lastly, if you can update us any incremental details on the Sony deal, any hurdles you expect from your largest shareholder, any possibility of an early closure, and whether there could be any need for any change in terms. If you can provide any incremental insights on the Sony deal.
Nothing I can share, Kunal. If you missed my remarks, I only said that after the in-principle approval from the board, the due diligence has commenced. It's proceeding very well on track. We are very confident of getting it closed well within the timeline, if not before that, of the stipulated timeline. So we are working diligently on that. We'll come back to you with more details once we have that.
Are you seeing any legal roadblocks, or the path seems clear, assuming that the two shareholders agree to the terms?
As long as two shareholders agree to the terms, then the path is very clear. Why there should be any legal hurdles?
Okay.
As far as the other shareholders go, they will have a time to vote for it.
Understood. Okay. That's it from my side. Thank you.
Thank you, Kunal.
Mr. Vora, you have any more questions?
No, that's it from my side. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. As there are no further questions, I now hand the conference over to Mr. Anshul Jain for closing comments. Over to you, sir.
Thank you everyone for your interest in the company. Should you have any further queries, feel free to reach out to us. Thank you.
Thank you. Ladies and gentlemen, on behalf of Zee Entertainment Enterprises Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.